Hey Jay, good evening.
Hi Ramya, good evening.
How was your weekend been? All good?
So far, so good.
All right. Jay, I thought we can have a quick chat on Netflix because Netflix is going to have a big event in a week's time, November 17th, I think. It's going to, they've announced a stock split of 10 is to
Mhm.
1. So I thought we can discuss what that means, what is a stock split, and how we can now use this opportunity to get into Netflix in multiple ways. Because right now Netflix stock is a little over $1,000, and how the stock split will enable us to get do things that we probably could not have done earlier.
That's a first of all a great topic to discuss, Ramya, and also very timely as well because the stock split is going to happen a week from now, and let us probably look at like you said, no, Netflix is a very high price stock. It's not a overpriced; it is a high price stock. It is over $1,000 and kind of makes it a little difficult for retail traders to especially do options because it is a $1,000+ stock. Before looking at what are the possibilities, and I think that they've announced a 10:1 if I'm not
Right, right.
wrong. It's a 10:1 split. So let's probably take a look at uh, the history of Netflix stock. I am sharing my screen here. Did Netflix have any stock splits before? Apparently, they've had stock split twice before. One in the very initial days, 2004, where they gone for a 2:1. I think that was the days when Netflix used to send DVDs and then where you watch and then they will send it
Mhm.
in a mailer and then you put it back and send it back. So,
Right, right.
but that was like even that was an exciting time because that was something which nobody else did. And
Right.
then I think in 2015, when they had done the 7-for-1 split, possibly when they had started the streaming service they're watching now, and I think they've come a long way. And now this upcoming 10:1 split is something which is watched by a lot of people. Uh, like you rightly said, this is a very expensive stock uh, for us to play options and things like that. I think this is a very key one.
So 100 stocks of Netflix right now is more than $100,000, which is not within the reach of most of traders, retail traders at least.
As you can see, Ramya, this is started very small, and I think they went public in 2004 or sometime around that. And
Right.
then, then when the
I,
split happened, it was a stock only. But like you said, 2015 was the next stock split, right?
Mhm.
Kind of gradually gone up, gone up, gone up. And this is one stock which is also highly volatile. As you can see, there was also a big drop during 20, I think 20 to 2022 June.
Right.
And then after that, steadily gone up. And it is now currently at 1,103.
I think it is just a little bit off of the highs.
So, like you said, it's quite a high price stock to trade any options on a high price stock like this. This will probably need, because, 100 stocks, then you can play with, even, if you have to write a covered call and things like that, you need to have 100 shares of Netflix, which is around 110,000, makes it little unreachable for the retail
Right.
investors to look at, accumulating stocks and writing a covered call and all that.
So I guess now that it's the stock split is anticipated, and the date is announced. So what I went ahead and did is I purchased 10 stocks of Netflix with the intention that post the split on the 17th, I will have 100 stocks of Netflix, and once I have 100 stocks of Netflix, then I can put a covered call on it.
Great point, Ramya. It's, and also the timing is very, 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 very good. in the sense that because right before the split, if you purchase 10 stocks, which is like $10,000 or so, automatically what will happen on the day of the split is this 10 stocks will become 100 stocks for you.
Right.
Right now, you won't be able to do any options or any sort of options. The reason being, it is only 10 stocks, right? So on the day, that is, I think, if I'm not wrong, November 17th, right? On the day of, uh, let me open the Fidelity Active Pro also. On the day when it actually splits, it will become, yeah, like you said, if you have 10 stocks, it will become 100 stocks. So then I think the same day or the next day, because it will take a day's time for the platform to adjust it and all that. And once you do that, then you should be able to write a comment on.
Netflix.
So I'll share the screen again. I wanted to take you to the Fidelity Active Pro and show you the simulate and show that as well. You said you have got 10 stocks, right?
Yeah, I did purchase
So,
10 stocks.
yeah. So right now you won't be able to do a covered call on this
Correct, correct.
because it is only 10 stocks. And
Right.
right now, if you have to write a covered call on this particular thing, you need to own 100 stocks. So I'm just saying, because since it has not yet gone through the split, I'm showing the 100 one, because technically what will happen is once the split completes, this 10 would have become 100. If
100,
you had
correct.
owned 100, so you can imagine this. So if you are
Mhm.
having 100, then you can write a covered call. So
Correct,
we are just simulating it and seeing. The reason being, then this will, but I won't be able to simulate the price. So because
correct,
it is
correct.
fixed, it is as of current date. So if you see this one, this would have become 100.
Okay.
So the same way, the options contract also, let's say if you write a covered call right now on this 100 stocks, what price you are comfortable selling the Netflix shares at?
So
Give me
I
a
Yeah,
give me a number.
yeah, I acquired Netflix not so long ago. So let's assume it was at the same price, right? 1,100.
Mhm.
So if I just want to capitalize on the stock split, assuming Netflix has a good ride after the stock split. So say in 6 months' time, maybe I go for like a 30% increase on the stock value. So even like 1,300 to 1,400, something in that range.
Yeah. Let's pick the 1,400. And you said 6 months, right? So possibly from now, April or
I
May.
mean, May 26 is fine. Yeah, yeah.
Yeah, May 2026. If it goes to 1,400, you are okay to give away your stocks. That's what you're saying.
Correct, correct.
So if you look at this covered call, it will give you a premium of close to anywhere between 3,215 to 3,610, assuming that it gets
About
filled at a
30.
mid price, about 3,400. So you will
Right,
easily get 3,400 in premium for around 30% of gains from the day that you entered the stocks. So
right,
this is possible with this 100 stock. But right now, I mean, like you rightly said, no, for us to write this covered call, you need to have 100 shares. For that, we should be prepared to invest 110,000,
right, correct.
and then you can write this covered call.
Mhm.
You cannot write covered call right now because you only
Correct,
possess 10 stocks. But once the 10 gets split, what will happen is these contracts all will get revised, because
right.
assuming that the Netflix stock price stays the same from now till November 17th, when the stock split actually happens, what
Mhm.
will happen is Netflix, instead of trading at $1,103, it will trade at $110.3.
Correct.
Assuming, I mean, this is an hypothetical example that Netflix stays the same, whatever is
Mhm.
the exact stock price the day before the stock split, it will get
Correct.
divided by that. So this options contract also, the strike price will get divided by 10 and your premium will get divided by 10. That's how it will work. So
Yeah.
this will be like May 15, 2026, assuming everything else remains the same, and assuming the same Greek values hold on the day of the split. I mean, you can just check and see how it is playing out on the
Yeah,
day
but
of the
it'll be
split.
like 140 strike with a
Yes,
price of around $3.40 or something like that, assuming
exactly, which
everything
is
stays the same.
$340. So you can simply collect $340 on the 10 stocks that you own now. So this
Right.
was not possible for us retail traders when this split didn't happen.
Good. Good.
That is something which, uh, typically when a split happens, there's a lot more volume because of a lot of retail investors coming into the options game, which means that it'll usually it'll uplift, and there are instances when it has gone down after the split as well. So it's not like guaranteed thing, but regardless if it goes up or down, this is helping us to get into options contract, which was not possible before the split. So that is
Right.
something which we need to
Into a
keep in mind.
covered call contract, yes.
Yeah. One is the covered, and other is, let's say that if you want to do a short put on Netflix today,
Right.
same, I will say the same May 2026, or maybe even let us take a lesser time frame, like 3 months from now. Let's assume that we are okay to own
How
Netflix.
about 800?
800 is, yeah, quite good. 800, and see, if you do that now, basically you are receiving a premium of anywhere between 40 and 820, which is like probably, let's say, $800 or so. You're receiving $800 premium for signing up for an obligation to own Netflix at 800 strike.
Yeah, which
That's
is
what this
like I
means.
need to have like 80,000 cash to buy Netflix at 800.
Spot on, Ramya. So if you're doing a cash secure put, you'll have to set aside $80,000 to receive that $800 premium.
Yeah.
And imagine the same thing after the split. Let's say if you're ready to, but this is like at a very low delta, 6 delta, right?
Right.
I mean, so maybe we can even go for a little higher delta, 840 or 900.
Keeping the same example, Jay, like $800 put post strike will become like an $80 put, and in which case, the cash secured put will only need like closer to 8K versus 80K, right?
Exactly. And for setting aside that $8,000, assuming that the premium stays the same, you will receive $80 upfront, which is almost like 1%, right? 8,000,
Right.
1% of $8,000. You're receiving upfront as premium for that, for just signing up for the obligation. And it is not a big amount to set aside as well, because it is just $8,000 as opposed to, setting aside 80,000.
Yeah, just relatively speaking, a much smaller amount. Yeah.
Much smaller amount. So this is in a nutshell, this is how retail investors get a chance to play with options when it comes to a bigger stock, which goes for a 10:1 kind of a split, like how we are seeing Netflix is going to do on November 17th.
Right. So I'm just getting ready to put a covered call, hopefully on November 18th, on the 10 stocks that I already have, which will become 100. And then, depending on how Netflix goes, I might even, try like a cash secured put for a, depending on how Netflix stock performs over the next couple of weeks, I might even try to get something at a lower price in case the stock price trends down after the split, since we don't know how it's going to behave. Any stock is like that any day.
It's a very interesting point, and you brought out a very good thing, especially after the split. Let's say if it is very volatile and it goes down, when the stock goes down, typically the put prices kind of gets loaded up a lot. Prices go up. So when, let's say, if Netflix goes down from 100 to, after the split, if it is 110 to 100, the same 800 put will probably enable you to receive much higher premium. Right now, we are seeing this as, anywhere between 740 and 870. So you can actually, capitalize on the volatility that comes in after the split, and possibly get into, because right now we've got into close to $110 per share. The 10 stocks, the cost basis will be 110 for the 100 shares, right? So if that helps you to get into Netflix stock at 80 or 85 or whatever is the price that you set in, it can help you bring much more bigger premium, and it is going to, in the long run, it is going to help you accumulate these stocks, and you can write a covered call on that set of stocks which you might end up acquiring as well. So that way it helps people like us, the retail traders, in a way to play with a stock which has good potential and with lot of volatility to help play with options as well.
All right. Thanks a lot, Jay. I think this is, I look forward to more discussions like this. I'm sure there's something happening in the stock market every day of the week.
Have a fantastic ride with the Netflix stock. Thank you, Ramya. Bye-bye.
Bye. Bye.